Hey everyone, Steve here from 11ish, and today we're going to talk.
Sorry, I don't know how to help with that yet.
Today we're going to talk about whether there's still a gain to be had with Peloton in the next 3 to 6 months. Okay, so what is Peloton? Peloton is a new age home workout company that started off super niche, strictly in the indoor cycling home workout business. They first started off in 2012 with seed money to build the prototype that you see today, with a big screen and the software that run on Android and a professional grade bicycle that costs around $3,000. And then they went to Kickstarter to presumably generate buzz and marketing. And then slowly but surely, actually pretty quickly, they became a unicorn. They went IPO last year around September for $8 billion evaluation. They only leverage around 1,800 employees. That's pretty impressive. The reason why all of that information is impressive is because in a very short amount of time, with only around 1,800 employees, they were able to generate such value. To me, it means that either they have a really great team, top-down leadership to the people that run the shops, people that does the delivery, customer service throughout, or they have incredible market fit. I believe it's a combination of both. So you might wonder, what's their core value, right? What differentiates this business and protects them against competition? Because home workout is not a new concept, right? Well, as a product manager, the things that I see that their company is doing is that they basically started out super niche as just indoor cycling so that they can build a dedicated customer base that other fitness companies are not particularly interested in touching. And they found value in this user segment. Then they built a product that is super, super well made and high end. They build buy-in because they create gamification for this workout process, and that's their digital screen and user profile, the social aspect of it, connecting with Strava, and also the gamification of it in regards to the leaderboard. All of this combined creates engagement and retention that help them drive great value. And as they build their user base, once they've gained critical mass, they start extending their offering, right? Extending their offering to other home fitness aspects, like weighted workouts or dancing type of thing, meditation, yoga, all of these fields that have established verticals throughout home fitness, they are now tackling because they have critical mass in this one niche, and now they can afford to tackle the other one. This is a very typical approach for a startup to grow their business, right? Start where the competition will ignore, build your base, and then expand into your competition's space. And I think they did a really, really great job. In terms of core differentiator, I think it still is revolving around cycling, because ultimately it's about this gamification of the leaderboard and user profile. They don't really have this idea well built out for the other home fitness offerings yet. I hope that they built that in as well, because that's, in my opinion, what truly drives retention and engagement. The feeling that you're actually building something, not just physical, but also digitally. That's why RPGs are so popular in video games, right? You're building a user profile of yourself, combining a hybrid model of both physical world and digital world. I think that is one of their true value props. And furthermore, the value prop is strengthened by the fact that a competition tried to do the same thing, and they actually just recently won a lawsuit against it. And not only beat that lawsuit down, they also took their customers. I think that is a great sign for a business that is well protected and ready for high growth, even higher growth. With that value prop, they're effectively tackling two main user segments. This is important to note is because you can figure out how their total addressable market is based on which user segment they're attacking or capturing. The first user segment are the high-end ones who are looking for a personalized training experience with a personal trainer, and is also looking for that immersive experience that doesn't have hassles like commuting, right? The second user segment are more general. It's for people who are looking to just work out but doesn't necessarily have the time to do a commute to the gym, right? Especially for me, I think it's a pain in the butt when I have to drive 30 minutes to work out for an hour and then drive another 30 minutes back. That's 2 hours down the drain, right? That's really, really frustrating. With Peloton, it gives you the opportunity to work out at home as though you were at the gym. The best part is that they have classes that are like 10 minutes long, right? That's great. So even if I don't have much time, I can still get a workout in. That's something that I've always, weighed the benefits of. If I only have so little amount of time, I just back out. I just can't go to the gym, right? Not because I don't have time to work out, but the time to work out plus commute, I don't have that time. Peloton solves that problem magnificently. So with those two user segments, that total addressable market is huge. And especially because we're all locked up at home right now due to this whole situation with the global health crisis, it actually gives them a really, really unexpected opportunity to capture even more of the market. And one thing that a lot of people don't realize, to capture the second bit of the market, the more general market, you don't actually need a bike to leverage Peloton, right? Because they have the other home offerings. So in fact, unless you got a subscription with 24-hour fitness like 10 years ago with a $20 contract like some of my friends do, their monthly subscription fee is comparable to a gym membership fee. So you're essentially having a huge value gain so that you work out with them in your own convenience. You can avoid the health crisis, and you have the personal training experience as well. So there's a lot of value add for the entire spectrum of people who are looking to stay fit. I think the only user segment that they're not tailoring to is professional athletes. Even though you hear stories like professional athletes using Peloton as a cardio trainer, they're not targeting bodybuilders and stuff like that. But that's a very, very small niche all in itself, and I think it's very smart that they're not trying to tailor to the entire market of people who are looking for fitness. Okay, now I'm going to talk about why you should and also why you might not want to invest in the company. It's very important for you to capture both perspectives, right? Understand both the positives and the negatives, the potential gain and the potential loss with every stock investment that you make. So please listen to both. Even if you're in love with the company or hate the company, you should definitely hear both sides of the story. Okay, so why should you invest in the company? Their team seems to be doing a great job with only 1,800 employees, and also they seem to have great market fit, right? They built great value. Especially with this COVID situation, they've extended their free subscription to capture more users during this time, and I think that's a very smart marketing strategy. It also is a very ethical one, right? Giving people free workout when the financial situation for everybody is pretty tough right now. The other point is that they won a lawsuit against a competitor who were trying to gamify the indoor biking service for themselves and then captured those customers. They literally captured those customers. I think that's a really, really pimp move that will benefit Peloton substantially. The last point, and I think one of the most important points I want to capture for why you might want to invest in Peloton, is that they have a famously high retention rate. That means for all of the users that they capture, most of them stay with the subscription service. Once they are signed up, they see the value and then they stick around and then they use the product and they stay fit, and so everybody wins, right? That is something that every company wants, great retention. And so the only thing that they want to improve on to generate more value, at least based on the current valuation company, is that they need to figure out how to acquire users faster. And ironically, when everyone is locked in at home, it benefits them. So with all that said and done, I think that there's a potential about 15% upside still. And I think that as long as that there is this at-home lockdown situation, that percentage will grow higher. And I frankly think that working out in public places will never be the same again because of this health crisis. So I think that the 15% gain is pretty accurate. Now, why might you not want to invest in it? I think that Peloton has done a great job warding off competition, but the competition will always come. Competitors, as long as there's money, competing products will always try to find loopholes to try to tackle the same market. That's just how business works in a free market. Right now, nobody is succeeding yet, but there is a huge well that is coming along, right? That is Equinox. Equinox literally raised money from one of the largest VCs in the world to tackle this particular problem, that is Peloton, right? And they would have actually gone live with their product, I think about 2 months ago, if this COVID situation didn't explode unexpectedly. And so that is, in fact, to me, the most major concern that I have about the success of this company. But for the next 3 to 6 months, my personal opinion is that it is a worthwhile investment, because I'm basically looking at whether they're going to be doing well for the next 2 quarters. So that being said though, if this health situation ends sooner, and if Equinox is able to launch their product sooner, then I do think that there is a potential downside, especially if that once they go live, people start raving about their product and their software and their user experience. If it turns out that they're better, I definitely see people jumping ship off of Peloton in terms of investment strategies. And so I see a potential downside of about 10%, because right now Peloton is still the market lead. Even if they lose some of the market, they're still the market lead, right? And I think that they'll have a time and opportunity to challenge Equinox with better differentiators, better value prop, that kind of thing. And so that's why I see that their downside is no more than 10%. Actually, I am currently investing in Peloton, but I'm keeping a very, very close eye in terms of what's going to happen in the next couple months. If you are a more cautious investor and you believe in the Peloton pitch, but you're a little concerned about the competition or the price point of Peloton, or how things will play out in this current pre-recession phase, I recommend that you wait till their earnings come out, which I believe is May 16th. See how that plays out, and then figure out whether you want to invest or not. All right, guys, I hope that content was insightful and useful for your personal investments. If you're a speculative trader like I am, then I think betting before the earnings report is a great move. If you are a long-term investor who is afraid of things happening, I do not think that this is a long-term investment, at least not yet. I suggest you wait till the earnings come out, and I also suggest that you see what Equinox come out with before you figure out whether you want to invest in Peloton or not. But as a short-term trader, for the next 3 to 6 months, I highly recommend that you trade on Peloton. If you disagree, please leave a comment. If you do agree, please leave a comment. Hit the like button if you like it, hit the dislike button twice if you don't, and please hit subscribe if you want more content like this. Thanks for your time, and I look forward to working with you next time.